Hello everyone, this is Munisa. I welcome you all to my class. Today we will be having a discussion regarding IAS 38, that is International Accounting Standard number 38, Intangible Assets. As we do know that we divide our assets into two main categories, that is non-current assets and current assets. Then under non-current assets, we do have further classification, that is tangible non-current assets and intangible non-current assets. IAS 16, property, plant and equipment, which we discussed earlier, deals with the first category of non-current assets, that is tangible assets. And the standard which we are going to discuss today, IAS 38, deals with the second category of non-current assets, that is intangible assets. Let us extend our discussion by having a look at the definition of intangible assets provided to us by IAS 38. IAS 38 defines intangible assets as an identifiable non-monetary asset without physical substance. As you can observe that there are three major points to be considered for this definition. Let us discuss them one by one. Identifiable means that an asset is separable from the business entity or when it arises from the contractual or other legal rights. Then, generally speaking, non-monetary assets are assets that appear on the SOFP but are not readily or easily convertible into the cash or cash equivalents, which means that they do not have any specified dollar value like other assets as property, plant and equipment, investments, accounts receivables, etc. Then thirdly, intangible non-current assets do not have any physical substance like other assets. For example, cash or land and buildings or inventories. All of these assets do have physical substance, but intangible assets do not have any physical substance. Examples of intangible assets, intangible non-current assets can be licenses, copyrights, patents, brands, trademarks, franchises, and many more. Then, my dear students, there are some assets which are not recognized under IAS 38. For example, there are some intangible assets which are covered by other reporting standards. Number one, it can be goodwill, which is covered by IFRS 3 business combinations. Goodwill is an intangible asset, but it is not covered by IAS 38. You should also consider here that only purchased goodwill is recognized in our books of accounts as per the requirements of the standard. We cannot record or recognize internally generated goodwill in our books of accounts. But it is covered by IFRS 3 business combinations, which we will be discussing later. Then we do have deferred tax asset, which is covered by IAS 12 income taxes. It is not covered by IAS 38. Then assets held for sale are covered by IFRS 5. Assets held for sale and discontinued operations, they are not covered by IAS 38. Then financial assets, expenditures on development and extraction of minerals, oils and gas, exploration and evaluation assets. All of these are covered by other standards, not by IAS 38 intangible assets. My dear students, the objective of IAS 38 is to specify the accounting treatment for those intangible assets which are not covered by other standards. And intangible assets are controlled by an entity as a result of the past event, and future economic benefits are expected to flow from the asset. Intangible assets can be recognized by the entity in the financial statements if the following two conditions are being met. This is a recognition criteria of intangible assets in our books of accounts. IAS 38 says that if this condition, these two criteria, recognition criteria conditions are being met, only then we can recognize the intangible assets in our books of accounts, otherwise not. Number one, it is probable that the future economic benefits attributable to the asset will flow to the entity. And number two, cost of an asset must be reliably measurable. If these two conditions are not met, then we are not allowed to recognize intangible assets in our books of accounts. Now, if the asset is acquired separately, for example, purchased or received separately as an asset standing on its own, then its cost consists of a purchase price and any directly attributable cost for preparing the asset for its intended use. And sometimes the asset's cost is its fair value, and it is when the asset is acquired in the business combination. So when you purchase an intangible asset, it is relatively easy. But what about the assets which are generated internally? IAS 38 provides us the guidelines about several types of internally generated assets. Let us start our discussion with the development costs first. Development cost is the application of research findings or other knowledge to plan or design for the production of new or substantially improved materials, devices, products, processes, systems, or services before the start of commercial production or use. This is a definition of development cost provided to us by IAS 38. You should consider that development cost will be that cost which is arising before the start of commercial production or use. Once we have started our commercial production or use, then it will not be considered as a development cost. So it can simply be the design of the prototypes, tools, molds, etc. We cannot capitalize the expenditures for the development stage unless the 6 points criteria given by IAS 38 for capitalization of development costs is not met. And you can learn it with the mnemonic of Pirate. P means probable future economic benefits. It should be probable that the future economic benefits from the asset will be flowing towards an entity. Then I, business entity must have the intention to complete the asset and to use it or sell it. Then R, business entity must have the adequate resources to complete the development of an asset and use it or sell the product. Then A, the entity must be able to use or sell the asset. There must be a particular market for the asset. Then T, technical feasibility. There must be a technical feasibility to complete the asset. And then E, the entity should be able to measure the expenditures reliably. Another question in regards to the internally generated intangible asset is research. What is a research cost? And what is a research? Research is an original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. This is a stage before to the development stage. And all of the costs which we are incurring on this purpose are considered as research costs. My dear students, in this phase, you do not develop anything yet, but you are just mapping the situation like you do as the market research, and for example, you are evaluating any possible alternatives. IAS 38 prohibits us to capitalize the research costs. You cannot capitalize any cost of the research. Instead, these should be expensed in our statement of profit or loss as they incur. Then we do have a goodwill which is generated internally. And IAS 38 prohibits us to recognize internally generated goodwill as an asset. We do recognize purchased goodwill which arises, for example, in business combinations, but that is also covered by IFRS 3, not by IAS 38. So you do not need to recognize internally generated goodwill as your asset. Then there are other assets like, for example, brands, customers lists, publishing titles which you have internally generated in order to run your business effectively. Keep this thing in your mind that you cannot capitalize any of these because they fail to meet one or more recognition criteria, for example, separability or any other. Now, let us discuss about the measurement of internally generated intangible assets. Excuse me. IAS 38 says that an intangible asset shall be measured initially at its cost, and this is the same as we did for IAS 16 property, plant and equipment. We did measured our property, plant and equipment initially at its cost. And this will be the same in the case of investment properties as well, which is covered by IAS 40. So internally generated intangible assets must be initially measured at their cost. You need to capitalize your own internal cost, and you can capitalize only the cost either directly attributable and allocated to the asset on the reasonable and consistent basis. You can capitalize them from the date when the intangible assets start meeting the recognition criteria for the first time. And you cannot capitalize these expenses retrospectively. Then what about the subsequent measurement of intangible assets? For subsequent measurement of intangible assets, we can adopt either a cost model or revaluation model. And here we are not just talking about the internally generated intangible assets, but the purchased ones as well. The standard IAS 38 allows us to measure our intangible assets subsequently either by adopting cost model or revaluation model. Under cost model, an intangible asset should be carried at its cost less any accumulated amortization and any accumulated impairment losses. If you do remember our discussion regarding IAS 16, in that one we considered cost model, and I told you people that under cost model we have to deduct accumulated depreciation from the cost. But here the depreciation term is replaced by amortization. So whenever we are subsequently measuring our intangible asset by using a cost model, we have to consider the cost less accumulated amortization and any accumulated impairment losses. For the valuation model, if the revaluation model is to be applied, then fair value should be measured by reference to an active market. When we are measuring our intangible asset by adopting a revaluation model, then we have to deduct an accumulated amortization and accumulated impairment losses from the fair value of an asset. And this fair value can be measured by reference to an active market. One more point which you need to consider for the revaluation model is that in effect, it is very difficult to find an active market for your intangible asset. This requires intangible assets to be homogeneous in nature, and this is very rarely the case. And therefore, to all intents and purposes, intangible assets are accounted for using the cost model by most of the entities. Only in rare situations where the valuation model can be applied, it is mostly applied in the similar way as IAS 16, dealing with the revaluation of property, plant, and equipment. Although the initial and subsequent measurement regarding intangible assets is same as the property, plant, and equipment, and also the depreciation. But there is one thing which needs to be considered in the case of amortization, which is related to the intangible assets. Intangible assets can have either a finite or infinite useful life. Finite useful life means that it's already known that for how many periods the asset will be used to generate benefits, or the number of units that can be produced by that particular asset. For example, in the case of software, which needs regular updation. For the assets with finite useful life, residual value is assumed zero unless there is a buyer or active market, and we do need to revise amortization method, period, and useful life at the end of each financial year. On the other hand, there are some intangibles having indefinite useful life, where there is no foreseeable limit to the period over which the asset will generate cash flows. For example, in the case of brands, trademarks, etc., we do not know that for how long the asset will be able to generate the cash flows. Those assets which are having indefinite useful life, we do not amortize them. Instead, we should revise the useful life at the end of each financial year. And if at any point it is considered that the useful life of the intangible asset have become finite, maybe there is an indicator of impairment and it should be tested. But we are not at all allowed to amortize them. We will never amortize the intangible assets having indefinite useful life. Now let us discuss that how are we going to measure our intangible assets subsequently when revaluation model is adopted. Accounting treatment of revaluation purely depends on whether the carrying amount of an asset is decreased or increased, as we did in the case of property, plant, and equipment. When the carrying amount is increased, then the increase shall be credited to the equity under the heading revaluation surplus. However, if the same asset was impaired before and the impairment loss was recognized to SOPL, then increase in carrying amount shall be credited to the income to the extent of reversal of such impairments. Then, if there is a decrease in carrying amount, it should be debited to the expenses in SOPL. But logically, if the asset was previously revalued to the revaluation surplus, then the decrease in carrying amount shall be debited to the equity to the extent of reversing such amount of revaluation surplus. So this is how we do measure our intangible assets when the revaluation model is being applied subsequently. Now let us have a look at the derecognition of intangible assets from our books of accounts. We can derecognize our intangible assets from our SOFP in two cases, either on their disposal or when no future economic benefits are expected. And the derecognition depends upon the proceeds which we are receiving by the sale of the particular asset. the gain or loss on disposal has to be recognized in our SOPL. If the proceeds which we are receiving by selling the intangible asset are more than the carrying value of intangible asset at the disposable date, then it's a profit. And we have to recognize it as our income in our statement of comprehensive income. If the proceeds are less than the carrying amount of an intangible asset at disposal date, then obviously it is a loss, and we again are going to consider it in our SOCI, Statement of Comprehensive Income. Then if the proceeds are directly equal to the carrying amount of intangible assets at the disposable date, then obviously it's neither a profit nor a loss, which is rarely a case. So in that case, we are not required to recognize any profit or loss. So my dear students, this is an end of our discussion regarding IAS 38, intangible assets. For practice material and questions regarding intangible assets, you can just jump into my YouTube channel. You can find enough material over there. And if you do have any questions, you are most welcome to ask. You can just put your questions in the comment box. And thank you so much for listening. Take care of yourself. Goodbye.